Happy Friday, everyone. We got another inflation report out this morning known as the Producer Price Index Inflation Report for June, and it came out hotter than expected, which is the opposite of yesterday's CPI inflation, which came out cooler than estimated. Today's PPI inflation came in at a 0.2% increase month over month compared to the 0.1% estimated, and then year over year came in at 2.6% compared to the 2.3% estimated. This combined with last month's PPI numbers being revised up shows that the prices that businesses face, or wholesale prices, are on the rise, which is a different picture than the CPI numbers yesterday. However, the one bit of good news is that the part of these PPI numbers, if you look under the hood, that actually filter into the core PCE numbers that the Fed really looks at, because that's their preferred inflation measure. Those numbers actually were pretty low, and those numbers should make for June PCE month over month only 0.2%. So that's a bit of good news. And I wanted to touch a little bit on yesterday, why the stock market went down despite a cooler than expected CPI inflation reading. My opinion on that is that it was pretty much priced in the market that it was going to be a light and a soft CPI inflation print, and investors were pretty optimistic ahead of time, and that's why stocks were rallying. And when the reality of a negative 0.1% monthly print, or a decline in prices, or a monthly or the first sign of deflation, consumers took their profits. This is known as a buy the rumor, sell the news event. However, I think it's a buyable dip in my opinion, as we're seeing today with today's rally. Today's rally is happening despite PPI inflation numbers being hotter than expected. But either way, this most likely paves the way for a September Federal Reserve rate cut. The odds of that are over 80%. So that, combined with bank earnings coming out today, JP Morgan's investment banking revenue, investment banking profit really helped the bottom line. And then Wells Fargo and Citi, their expenses were higher than expected. And pretty much, high interest rates are still weighing on banks overall. And that's something that we have to watch. Obviously, if rates come down, that'll help the banks. The banks pretty much beat on their earnings, at least based on estimates, so that's good. But the fact that interest rates are weighing on bank activity is something we have to watch. It's good news that we're seeing more M&A and deal-making activity, so that's good. And overall, today's price action pretty much negated what we saw yesterday. Yesterday, as I said, was profit-taking, sell the news event. But I think the run-up in the market should continue. Yes, we were a little bit overbought on the short term technically, but I still expect a pretty strong rally for the rest of July, and obviously into year end, as I up my July year-end price target to 58. My year-end price target to 5,800.